Hi guys, so today we are starting off with chapter number 2, that is sources of data and analyzing data. So there are two types of data. One is primary data and the other one is secondary data. Primary data is that data that you yourself obtain firsthand. Okay. So for example, if you're going to take somebody's interview, that is primary data. The secondary data is that somebody has already collected that data for you and then they're giving it to you. So you yourself were not involved in the process, or you yourself were not taking down that information yourself, right? Somebody took it down for you and then they're giving it to you. So this becomes secondary data. Now, the problem with using secondary data is that not every time the data that has been collected by someone is going to be relevant to your work, right? Because let's say if a book has been written, or let's say if an interview was taken, so there might be a scenario where the interview was basically taken for for another purpose, let's say, or for that individual who was taking the interview for their own purpose, they took this interview, right? So it won't be relevant to your task, right? Also, the information, it is not very much up to date. The secondary information is not very much up to date because that is not taken recently. That could be outdated. Okay. Data could be incomplete. Also, when the data was collected, at that point there might be um, some one-off scenarios or some adjustments because of which the interview would have been taken in a different way, or the answers that you would have gotten from the interviewee would have been very different from a normal interview, right? So you need to look at that aspect as well, that there might be some seasonal adjustments or there might be some one-off situations in which that interview would have been taken. Also, the reason why the interview or whatever data was collected in the form of book format, in the form of interview format, in any other format, but we do not know for what reasons that information was gathered, right? Discrete and continuous data. Discrete data is non-continuous data. What do I mean by non-continuous data? Discrete data can only take up the values that are countable. Continuous data is such that is going to take up values that are out of the range that we can also count. Okay. So, for example, if I say 1 to 100,000. So this is countable. But let's say if I say 15.5 or 15.75. Now this is not countable. Why is it not countable? How can you count um, rupees or let's say dollars 15.5? Okay, other than saying that okay, this is $15.05. That is something different, but you can't just count it, right? For example, if I say that okay, there's a measurement that we need to take. For that measurement, we will have to use the measurement tape, right? That is going to tell us that okay, this is 15.75 or this is 15.5, but we can't count it, right? So that becomes continuous data. Okay. Internal sources of information. Internal sources of information include all those sources that are within the organization. So the accounting system in which you're collecting the information, you're recording the transaction and everything. That gives you a lot of information because that actually helps you to produce the financial statements, right? So it does give you a lot of information So that is one of the internal sources. Payroll system relates to the system in which you're recording the labor cost. You're recording how many hours a particular person worked, how many hours of sick leave did he take, how many hours of training did he did, and all of that. Okay, so uh, payroll system itself is a source of information for the company. Strategic planning system relates to the system that is being used to help take decisions in the long run. So it has a lot of information, and according to that, it also makes a lot of assumptions and all. So that helps a company to decide whether to invest in a particular project or not. Okay. Benefits and limitations of internal sources. Now, benefits includes that the data is readily available, the data can be sorted, analyzed easily according to our uh, convenient time. Reports can be produced. Data also relates to the organization, so that is going to be relevant. However, limitations include that data needs to be further analyzed in some scenarios. It is not always the case, but in most of the scenarios, it further needs to be analyzed so that the management accountants can use it. Then we have external source of information. In external source of information, we have all the sources that are outside of the company. So the government collects a lot of data for analyzing to present statistics and all of that, right? So we can collect data from them. That is going to be one of the external sources. Other than that, business contacts. We have a lot of contacts that we keep with ourselves so that we can um, deal with people very easily so that we can use the information that they're providing. So, information availability is a major requirement, right? So, let's say we have customer contacts, we have supplier contacts, we have other contacts such as the people who are ready to provide a service, let's say janitorial staff or something. Okay. So we do have a lot of contacts when you are doing a business, right? And those contacts do help you when need be. So any information that you're getting from those contacts is going to be an external source of information. These could include that the customers could tell you about your product. They could tell you what they want, so that helps you produce the products better. Suppliers could tell you what rate of the raw material is going on in the market. Um, Generally, how the supply of the raw material is coming from the back end. Um, you can discuss the quality and the quantity with him, okay, on which the discounts are given. Any technical specifications can be discussed of the topic of the product. Then we have trade associations and trade journals. These are trying to make sure that trade becomes easier. These organizations are trying to make sure that trade becomes easier. So they have a lot of information. So we can gather information relating to member firms with whom you can, trade. What are the codes of practice that every member needs to follow? That is laid down by them. You can discuss the quality assurance. You can discuss about um, which countries can we trade in, what product can we trade, all of that. The financial press, business press, and other media, you know that the news channels provide a lot of data, provide a lot of statistics in regards with business news, economic news, stock exchange news, all of that. So that is a major source of information for businesses nowadays. Internet, the most easiest access, because internet is free. Basically, not exactly free. You're paying for your services, but using it is free, right? You can't say that um, you have to do a lot of extra effort to get your internet connected, and then you'll have to search through all sorts of information, and then you're going to access the information that you want. Internet is now easily accessible through your mobile phones, through your tablets, through your laptop, PCs, whatever. Even TVs now have internet, right? So this is going to be very easy to access, and internet has a lot of data available over it. The only disadvantage is that you can access a lot of data, but you do not know which one is correct, which one is not correct, which one is relevant to your requirement, and whether it is accurate or not accurate. You do not know it because everybody has access to the internet, and most of the people are able to edit the stuff over the internet. For example, we when I was writing my thesis, so I was informed by my mentor that you do not need to use Wikipedia to gather information. And I was like, why not Wikipedia? Because as a child, I always looked up at Wikipedia. Whatever I wanted to check, I would look it up on Wikipedia. But then he mentioned it to me that Wikipedia is editable. Anybody who knows how to edit it can very easily edit the Wikipedia, right? So that shows that the information that was contained by something that I believe to be accurate was not actually accurate, because everybody has access to it. Everybody can, post misleading information into it and all of that. So the quality um, I wanted for my thesis, I had to search for it a lot because most of the websites are such that they are editable. So they do not post very good information or very accurate information. Same is the case with the internet, most of the websites. Strengths of the internet: it is very easily accessible nowadays. It offers a lot of flexibility. Internet is on a click of the button. Also, it provides a lot of information for free, so you can get access to good information very easily. You do not need to sit around and look in the books to gather your information, right? And it does not cost you a fortune to use it. Benefits and limitations of external sources. Benefits are that there are a lot of sources of external information. It is easily accessible in most cases, such as internet. There's more general information available, and specific information is also available when needed. Limitations are that data may not be accurate, and it would be really time consuming if you want to actually check out what information is accurate from a list of websites. So you'll have to click on each and every button, and you'll have to go and check. You'll have to analyze it according to your thinking process, that whether these are actually time like whether they are providing you accurate data or not. And in most of the cases, people are not able to analyze it actually, because they are not aware of it, that most of the websites do provide you irrelevant or inaccurate information. Now, general economic environment. The environment, the economy, they are impacted by a lot of factors. They are impacted by international and local decisions. They are impacted by the cost and revenues of the business. They are impacted by the business decisions. They are impacted by macroeconomic policies, um, such as if you want to reduce interest rates, then what policy are you using? If you want to make sure that exchange rates are stable, then what policy are you using? If you want to know that inflation needs to be low, then what policy are you using? All of this needs to be looked at when you're analyzing the situation of your economic environment. So interest rates, if we increase them, they're going to increase the cost of borrowing money, right? So if interest rates rise, people tend to avoid taking up loans and instead they are going to probably start saving. Why? Because at this point, if they save into savings account from which they are going to get profits, so they believe it is best for them. Why? Because they are at least earning something on the money that they have kept in the bank account rather than paying off higher interest payments. Inflation is a general increase in the price level of goods and services. So the general price level rises, and this leads to lower disposable income for each and everybody. Why? Because your incomes are not going to increase with the same amount as inflation is increasing, right? So you still have a limited income, whereas the prices of goods and services move up. Now, what happens is that you are going to get only limited amount. So, let's say if you were able to buy um, $6,000 of grocery, if you're a very, very rich person, in that case, I'm saying. So, let's say if you're able to buy $6,000 of grocery, um, by the end of the month or by the start of the month, whenever you get your salary, and your salary is just $10,000. So what happens is that you will be left with 4,000. Okay. But if um, inflation increases and now what you are buying, which was the same amount of goods and the same kind of goods that you previously bought, because you considered them as your necessity, they cost you in total $8,000 now. So what is happening? Your income is the same, that is $10,000, but now your expenses have reached up to $8,000. So you can only save $2,000, right? So basically, your purchasing power has reduced. Okay. Now, when we talk about the exchange rate relates to how one quantity um, is expressed in terms of another quantity. So, sorry, one currency is expressed in terms of another currency. So, what happens is that this basically tells you that, okay, let's say it's dollar to Pakistani rupees. Okay, so um, $1 costs us right now, I believe, 160 rupees. So the exchange rate is going to be 160 to 160 rupees to $1. Okay, or the other way around. Either ways, whenever we compare two currencies with each other, that is called the exchange rate. So exchange rates do differ in countries and they are also impacted by the economy's conditions. So if inflation is going to increase, there's going to be a negative movement amongst exchange rates. If there is any other major change in the economy, this is going to negatively or positively impact the exchange rate. Now, sampling techniques relates to when a business takes a chunk of the population and they observe them and then they create some experiments on them in order to get the answers of what they require, or in order to get the information from them that was required by the business or by the, let's say, government authorities, because the whole population cannot be analyzed. So the thing is that you can't go door to door to the whole population and then ask them whatever question answers you want to do with them, right? But taking a sample and then whatever answer you get from the majority, you need to extend that onto the population, making some assumptions. That seems to be a lot more realistic and better, which is why a sampling technique is set. And there's not one sampling technique, there are a range of sampling techniques. So here it is, a random sample. In a random sample, what happens is that a simple random sample is taken. Like every population has an equal chance of being selected. So here's an example. It says if a 10% sample of a population of 200 items is the required, then the sample size needs to be 20. How 20? 10% into 200. Numbers from a table of random numbers can be taken and the corresponding items are extracted from the population to form the sample. Example, in selecting a sample of invoices for an audit. Now, since the invoices are already numbered, this method can be applied with the minimum of difficulty. So every person will get the chance of being selected, but the sample should be of 20 people only, or of 20 items only. If you're going to take the sample of the items, then 20 items. Systematic sampling is said to be a technique that creates a random sample. And in this situation, every person or every item that is included in the sample is chosen at after a fixed interval. So it says that the population is known to contain 50,000 items and a sample size of 500 is required. So they are saying that in one in every 100 items is selected. The first item is determined by choosing randomly a number between 1 and 100. So they chose 67. Then the second item will be 167th. The third item will be 267th. And this way up to 49,967th item, they are going to keep selecting one number that will be in link with the 67. Okay. However, they have mentioned that systematic sampling is not truly random because the first number needs to be chosen by you, and you most probably might be biased or something. So there is a danger of biasness over here. Stratified sampling, they make groups of the population, and after they have made the groups, they are going to um, make a sample size for each group or for each layer. Okay, so over here it says a sample of 200 people is required to investigate leisure habits in relation to age. So 20% of the population is going to be over 60, 65% is going to be between 18 and 60, and 15% are under 18. The 200 into 20%, how many people are there? 40 who are over 60 years old. 200 into 65, 130 people who are between 18 and 60. And 200 into 15, 30 people who are under 18 years of age. So this method is used in most scenarios by auditors and people who want to, divide the population into different stratas, or you can say different groups, and then they take a sample of each of them to analyze it better. So in multi-stage sampling, what happens is that the population is going to first be divided into, let's say, areas. Okay, could be in provinces, could be in cities, and then a random sample is going to be taken from the areas. Now, every area chosen according to step one is going to be divided into towns and cities, or even further down if that is possible, and then a random sample is taken of them. And each town or city that is chosen in step two is further divided into roads, and random sample of roads is then taken. And from each road, a random sample of houses is going to be taken. So from the houses, you're going to further divide it, and then you're going to take sample of the people that you want to take. This is multi-stage sampling. This is a very long process. Cluster sampling. This is kind of like multi-stage sampling, but instead in the last step, all the items are considered as a cluster. So they are all put together basically. So it says in many ways this is simpler and less costly procedure as no time is wasted finding particular houses and the amount of traveling by interviewers is much reduced. So you can just, let's say, keep it till roads, or let's say keep it till um, towns or cities. Okay. Quota sampling, it is such that a list is comprised of different types of people and they are going to be questioned. So a quota is set that, okay, if let's say an organization has 100 people that are working between 20 to 30 years, so out of them we are going to take 20 males and 15 females, let's say. Okay. So this is quota sampling that we can't go every to every person, and we can't do a head, count, and then we can't interview every other person. So we are just going to take a quota out of this, and the first 20 males and the first 15 females, let's say, are going to be interviewed. That is how it is. But this could also be biased. Now, sampling methods compared. What is an ideal sample? Mostly, it is best to choose at random because um, it creates less of a biasness. But then again, what if the random sample that you've chosen is not according to what you like? Let's say, what if these people are not able to answer your questions properly? What if, let's say, you want to check the interest of your product, but most of these people do not even use your product. They do not even know about your product, let's say. So, how are you going to check the interest of your product? Because somebody who does not know about your product would definitely not have an interest in your product. If he knew, then at least he would have some interest, right? So this might create a lot of issues. So you must take a sample properly. Now coming towards big data. What is big data? Big data is merely just a word, to be very honest. This relates to a lot of information that is being collected by the company, and this information is being used by the business in order to get the answers of the questions that they require. Let's say, how many people are using my product? I want to get the answer of that. So, for that, I do have big data. I'm going to check every customer's click on the social media, and I'll check how many people do have an interest in my product, how many people have bought my product, each and everything I can get uh, from big data, because like I said, it's a large amount of information, large volume of information that has all kinds of data available. How are you tracking this information? Through the click that the customer is doing on their mobile phones or on their laptops or on their tablets. Okay, so I'm not sure if you actually checked how Facebook works, But if you want something and you are planning on buying that, so Facebook is going to track all of your movements, and then it is going to start showing you advertisements of that kind of product, the ones that you want to buy. Similarly, I have noticed recently that Instagram is doing the same thing, because Facebook, Instagram, they both are integrated now, right? So they do show you what your interest is. But how do they show it to you? By tracking your responses, or tracking your um, information. So I'm not sure if you have checked that Facebook has this option of tracking your off Facebook activity as well. Recently, a video was launched and was circulated that people should turn that thing off, that Facebook is tracking your off Facebook activity. That wasn't basically because Facebook was trying to steal your information, your confidential information or anything. They're not going to leak it or something, but they are tracking your off Facebook activity so that they can make your experience a lot more better at Facebook by showing you what you need or what you are planning to buy. So they try to show you those advertisements and all. Similarly, companies are tracking the customer behavior and everything through big data. Now, there are three V's that characterizes big data. One is volume. By volume, I mean a large amount of volume is available to the companies. Variety is that you have different kinds of information available, financial as well as non-financial. So the data is structured and unstructured. For structured data, the bank is going to, they have given the example that a bank will hold a record of all receipts and payments for a customer. This is structured data. But unstructured data is that is not actually in a particular format. Velocity relates to how useful the information is and how quickly the information can be used to take decisions or used to enhance the performance. How do we process big data? The big data is uh, processed through different softwares. Hadoop software is one of the most leading softwares nowadays being used to analyze the data that is available to the companies. Even even Google Analytics and all helps you track the website traffic and all. Big data and management accountancy, how are the two relevant? So big data helps you understand what the customer needs and prefers. According to that, you can improve your marketing and sales. You can forecast the future demand of your product and the future sales and how much profit you're going to make in the future. You can improve efficiency, because if you know that, okay, in the near future the product's demand is going to increase, so better that you improve the efficiency and produce the products faster, right? Also, it helps you to provide detailed, relevant information that helps you analyze your performance better. These are some examples of big data. I have already discussed a major example of Facebook and Instagram with you. Other than that, even Coca-Cola, its director has mentioned that they do use big data. Even Pepsi company does use big data to enhance the experience of the customer. Risks associated with big data, the skills are not available in the market to analyze the big data. Okay, so not everybody knows how to do that, and not everybody has a very deep understanding of it. So an expert needs to be used for that, and that would be costly. The security of data is a major concern because you have a lot of information available and stored in your organization. and you are responsible to protect your consumers' information. So there might be, um, some loss of data. There might be some issues with the data protection. The data could be hacked and all. It could be cleared out. It could be edited. It could be leaked. Also, there's since a lot of information is available, most of the information might not be relevant for the company. So, analyzing that information or trying to process that information is going to just create a lot of um, what we can say, a lot of issues and wastage of time, I believe, wastage of time and cost and efforts. Also, the data might not always be correct, right? The data may be incorrect. Then there are technical difficulties and this hardware and software that you need to establish. That also is costly. So over here, our theoretical area is ending. Now we're going to move towards data averages and standard deviation and all.